Good afternoon, ladies and gentlemen. It's Monday the 3rd of April. We are glad to present to you our weekly analytical review of the Forex market. Last week, the euro-dollar pair corrected to the level of 1.0660, which coincides with 23.6% Fibonacci correction. This level seems critical, and its breakdown would lead to a full continuation towards the levels of 1.0580 and 1.0500. Otherwise, growth could resume to the middle MA of Bollinger Bands and further towards 1.0825 and 1.0900. While the main driver of last week's fall in the pair were hawkish commentaries from the Fed officials, this week's attention should be paid to March data on the US labour market and on the manufacturing PMIs from the US and the Eurozone. Technical indicators give contradicting signals. The MACD histogram is falling in the positive zone. Stochastic entered the oversold zone, which suggests a price reverse possibility. In general, the possibility that growth will resume is high. Last week, the pound-dollar pair showed choppy trade. On Wednesday, the price fell to the middle MA of Bollinger Bands, but then retested to the level of 1.2550, which coincides with 38.2% Fibonacci correction. Its breakout could lead to a growth continuation towards the level of 1.2720. Otherwise, the correction could extend to the levels of 1.2400 and 1.2340. At present, the pair is heavily affected by any news about the Brexit. Also, during the week, attention should be paid to February data on the manufacturing production in the UK. Technical indicators suggest a growth continuation. Bollinger Bands have turned up. The MACD histogram is in the positive zone, and Stochastic has also turned up. Expect a growth continuation after a breakout of the level of 1.2550. The dollar-yen pair last week rose to the level of 111.20, where it remains until now. In case of its breakdown, the price could fall to the levels of 109.90 and 109. A growth resumption would be possible after a breakout of the middle MA of Bollinger Bands and the level of 112.90, which coincides with 50% Fibonacci correction. In this case, the next targets for the bulls will be at 113.85 and 115. Technical indicators give contradicting signals. The MACD histogram is falling in the negative zone. Stochastic is turning down. In general, the pair has potential for further decline. Last week, the Australian dollar-US dollar pair was trading in the region of the middle MA of Bollinger Bands, but after the publication of weak data on retail sales and the AIG performance of the manufacturing index in Australia today, it fell to the level of 0.7600, which coincides with 23.6% Fibonacci correction. Its breakdown would allow the fall to continue towards 0.7520. In case of a price reverse and consolidation above the middle MA of Bollinger Bands at 0.7630, the price could grow to the levels of 0.7700 and 0.7740. This week's attention should be paid to the RBA interest rate decision. Technical indicators suggest a full continuation. The MACD histogram is about to enter the negative zone and form a sell signal. Stochastic turned down. In general, a further fall is likely. Last week, the price of gold remained near the level of 1,250, which coincides with 50% Fibonacci correction. Its breakout would lead to a growth continuation towards the levels of 1,264 and 1,277. Otherwise, the pair could fall to the middle MA of Bollinger Bands at 1,230 and further down to 1,220. Technical indicators suggest a fall possibility. The MACD histogram is shrinking in the negative zone. Stochastic has turned down. In general, further fall potential remains, however, growth resumption is also possible. That's all for today. Good luck with your trading.